Welcome back to the channel. My name is Patrick and I've got a trade recap for you today. So I've just finished trading for the day. I took two trades. Well, there's a few trades, but there's two I want to walk you through. So one's my standard move using a 5-minute charts, and the other one I actually found using a higher time frame. So I'll start with that one first and show you how you could use supply and demand on a higher time frame. So Hatron. Actually, I think I found it on the daily, but Hatron is a good way to start as well. So let's go to daily. Start with the daily, and as you can see, this is GU. It's been trending down for most of the year. It's come to this point here, and it started reversing. Once it beat this point here, which it did around this point, we're now looking at opportunities to buy. Really, I do trend both ways. I do trade both ways. I will scalp in both directions if it makes sense, but the trend is definitely up. So if you are a swing trader or you like to hold your positions a little bit longer, this video is for you really. So this is how I would find a move to trade with the trend on a higher time frame. So this is what this video is really about for this move here. So trading down and start reversing, going back up. So we're looking to take these highs. So this high has been taken. We're looking for the next zone, which will be up here. Yeah. So I'm looking for opportunity to get in, which is around here. So if you have a look, what price has been doing. So reading this with a naked charts, no indicators at all, and you see how easy it is to read it. If you actually get rid of indicators, things just makes more sense. Using supply and demand, it makes more sense. So supply is up here. Demand is down here. This is where it was bought up from. That's demand. Supply is where it was sold down from. Okay, so we have supply here. From this previous supply, hit the supply. This previous supply went down. When price came back to that supply, it went down. It came to this demand and went up. This is how the market moves. Yeah, on any time frame, on any instrument, this is how it moves, and this is something you need to learn. Sometimes you do find choppy situations like this. It takes a while before it moves, but this is on the daily. If I zoomed into the M5, you see it moves with the same pattern, and I'll show you that later anyway. So we're looking at opportunities to get back in because right now where price is at supply. It's just beating this last supply, so it's looking to pull back down into its demand, and once it does, it goes up. So what I was looking at is the pattern that was here. So it pulled into, this is the demand that pushed it up, right? Price pulled back into it here and it got bought up. It pulled back into that one here and got bought up again. It then pulled back into this. I was looking for that. It never happened, but it got pushed back up. So this is very aggressive buying. So it's a very strong uptrend. So I noticed what was going on in terms of price. It pushed up here, got pulled back down here, pushed up here, got pulled back down there. So it traded in this candle that pushed it up. Yeah. So when it got here and pushed up again, and I saw price yesterday coming down, I was looking to get into an entry in this candle here. Yeah. So I'm gonna mark that out. So my entry, what I was looking at is, I don't really trade support and resistance, but you know it hand when you put support and resistance alongside supply and demand, you see there's some sense in it. I think most strategies work, but there's basically you need to work with strategies and find out what's wrong with them, how to fix them, how to tweak them so it works to your advantage. So if I draw support and resistance here, you can see where I'm mapping it out. As I mentioned, I can't do it there. Let's see. You can see price hits there, it bounced up, hits the uses it as resistance, comes out, beats it, uses it as support, beats it. And the reason I don't trade support and resistance is because it's difficult to know where to place your stop loss. I'm not going to get in, for example, if I was to get in here and I place my stop loss under the last swing low, that's 200 pips. I'm not going to put a 200 pip stop loss, end up being wrong and getting stopped out and losing an account based on that theory. So that's the problem I have with support and resistance, especially on a higher time frame. It's just How I use it is the same way as I use supply and demand is as key areas. Yeah. So got the support and resistance here. So let me just get rid of that. So I marked that one out here because that's where I'm looking for price to turn around and start going back up. So as I mark that out, and should we zoom in? Okay, so price was coming down the previous day. Let's zoom into the price action now, and you can see exactly where we are. So price was coming down. Here's that supply, so here's that demand that pushed it up, right? So we're looking for price to come back into this demand here. There's a demand down here, there's a demand here. This is demand that pushed it to new highs. So that's where you could find the strong buyers, right? So let's mark that out. So I am interested in entering in this zone now on the lower time frame, yeah? So on the higher time frame, we've got that support and resistance making this key area. On the lower time frame here, we see now the demand that pushed this up here. If we go back to D1, you can see quickly. So that's where our box is here, yeah? That's our zone that we're interested in. We go back to M15, and you can see that price hits exactly where I draw that support and resistance line, and it's also within the supply and demand zone, and that gives me confidence. That's my confluence now. I don't look at anything else. This is no indicators. This is price action. That's what I'm interested in. This is demand that pushed it up. I'm waiting for price to trade within it. It initially on a higher time frame here, that demand would be from this point here to that swing low here. Yeah. The reason I draw that out is because I'll show you again, initially it did enter that first demand and got pushed up again, right? So now when price got underneath this point here, but still within this demand here, basically price here is at a discount. And for anyone who's trying to take price up higher, they're going to get in at this stage here. Yeah. So that's what I was looking at when I took this trade. So when price had come down to the zone that I was interested in, and it hit exactly on the support and resistance zone that I thought it could turn around on, and it started creating this reversal pattern, I was confident in this move. In terms of my entry, so I was confident that once it got to this demand zone here, I could take that up. So the morning session, the Asian session here, it started stagnating around there, it pushed up, beating this supply zone here. So that supply zone here. It's a weak supply, it beat it very easily. So when it came back down to that demand that beat it, I entered around here. So that was the Asian session. When the London session came in, as you see, it would have stopped me out. But anticipating that, I knew that this was a possibility. I didn't put my stop loss underneath here. That's typically where I put my stop loss. But knowing that it was the Asian lows, I wasn't putting my stop loss here. I had my stop loss a little bit lower. I had my stop loss underneath here, which is which is a considerable risk. I think that would have made it a hold on one sec. I think it was a 65 pip stop loss. It was about 50 pip stop loss. Yeah, about 60 pip stop loss it was. So I had it there because this was the zone I was interested in. I knew as soon as price touched into it, it's going to go. So I was aggressive with the entry. So when it got here, I thought it was ready to go. But anticipating the possibility that London could push further, I did leave my stop loss a little bit lower. So when it hit here, I was a bit more confident. When it then took out the supply, let's go back into, so here's the supply on the lower time frame. When it traded underneath it and then aggressively came up and took it out, I knew then when it pulled back into this, we could take price out there. So I could have took a second entry there, but with this account, you don't really want to put too much on it. You can't really take those kind of risks with when you're trading the 5% is funded account. especially when I already took a significant risk with the first entry. I don't want to add too much onto it, so I let that run. So that was the move. That was my first move today. And typically, I don't leave runners. I don't let moves breathe. I take 5 pips and get out. But I let this move, and I think I took it out around here. So it was about a 40 pip move I took. And I had some size on it, so I did get a good return. If I had a little bit more size, I probably would have been finished this level around this point here. But I was trying to be modest with the move, and I'm quite confident I can catch this again because price is trending up, and I'll probably be able to see another situation like this. So in terms of where price is going, I am anticipating it beats these previous highs up here. So if I did hold that move, we're looking at a 200 pip move. So I mean, have a look. Today's what is this? The 7th of December. So I'm predicting, well, I would like to see price beat those highs there. I'm going to see how long it takes, and if it does beat those highs there, I know in the future I could take these moves with confidence. 200 pip moves, and I could just do a swing move or something like that, and just you know complete a stage in one move or something like that. Be patient, less trades. That works for me. So something I'll look at, consider in the future, especially if this plays out exactly as I have predicted. It means I've read it completely right, and I've read it using supply and demand. So that's great. So that was the first move I took today, and that's still panning out. I'm not really patient enough to wait to see where it goes, and that's why I got out of the position. The move I then took, the second move I took, was this counter trend move here. So I'll show you again. So we got price action here, and we got aggressive selling here. So it completely took out this demand here. So we know there's strong sellers here. So where are we looking to enter? We're looking to enter here at this point here. If you look at this, you see it's exactly the same pattern or formation that was created on the higher time frame where I entered in the first move. So price comes up here, it consolidates a little bit, then it goes and beats the lows. So I'm looking at this zone here as my entry. So I'll draw that out. So this is the supply zone I'm looking to take price back down. So where is it? So my lows, or my zone should I say, is from there, and the highs of that zone is there. Well, a little bit further down there, yeah. So when price enters into this zone here, I'm looking to short it down. So that's what I did in terms of a counter trend move, because I knew price is not just going to shoot straight to my take profit. I knew it was going to have a pullback, especially it just beat these highs here. Okay, so it just beat these equal highs here. So when price beats equal highs and has a breakout like this, it tends to come back into that zone. It doesn't just go straight out, okay? So two reasons it tends to come back. One, it's got supply here, yeah, which is what helped it go back down. And two is if you're a breakout trader, you've entered here and you're hoping price you could take price to wherever, right? Price doesn't give you that much. It will give you a little bit, then it's going to come back out and it's going to take you out because your stop loss is underneath here. So as you see, price just came in just enough to take out this stop loss, got into this demand here, and then it's pushed up again. So I do think it's going to go further. It's going to hit this zone again, slow down, and then eventually breaks the zone and moves up towards the higher time frame take profit, which I predicted. So, and that's what's going on. So because I had this theory right on the higher time frame and I applied it on the lower time frame, I knew I could take this move here with confidence. So as I said, this is where I'm looking to enter. This is my zone. So when price came into there on the M5 here, I got in on this candle print here. Actually, I got in on that candle print, but I wanted that candle print here. Even though it hadn't reached my zone completely, it had reached a smaller supply zone underneath here. So there's one just underneath there. That's where it's stored at. So it could have reacted to that one, or it could have reacted to the one above. As you can see here, it reacted to the supply zone just above it. I'll draw that out again so you can see exactly what I'm talking about. So there is a mini supply zone here as well. Yeah. Okay, so it got into this supply and it's stored there. And it printed actually, not just stored, it printed in the direction that I wanted it to go. So I was looking to enter there. I got in a little bit late, so I got in there. Yeah, and obviously I wanted to take price back to demand, which would have been about 20 pips here. I did say it's going to break back in and possibly get these breakout traders stop losses here, which would have made it a 30 pip move. I didn't hold that. I think I only held it for, again, probably 5 pips. I always try to be modest when I do a counter trend move like this. So I think I held it about 5 pips, maybe held it a little bit more. So it did that. It played out exactly as I wanted it to or expected it to. And then again, in the future, I am going to try to take moves from supply to demand, demand to supply, and so on, because it just makes sense. If not the entire move, I may scalp it and leave a runner. But it's what I'm working on. It's what I've been reading, and it's what's been playing out. So I'm gonna bear that in mind in the future. So regardless of all this noise, all the manipulation, all the taking out and stuff like that, I was able to catch those 2 moves today, and I'm very happy with it. So I hope this is useful for you. So if you use swing trade, or if you like to get in the move and just let it run or play out, this is a good way to read the charts using supply and demand. So higher time frame, you can see what's going on. Even on a choppier time frame like this, price action like this, like Swiss, which is it's not going nowhere really. What's this? USD Swiss. It's not really going. It's not going nowhere really. You could still read. You can see price came from here, went into supply, came down, came into demand, went into supply again, came down into demand, and that's how it's been moving. It's a very simple way to read charts. It's just once you read it, it's just then finding an entry or exit, which is what you need to work on in the future, and it's something I need to work on as well. So I'm going to be working on that. Hit the subscribe button, see how I progress with that, and if you found this video useful, so show your support by hitting that like button and staying tuned. So I'm going to wrap this up here. I hope you appreciate that video. Until next time, this is Patrick signing out. Peace.